It is straight up 12 noon, so we'll get started. Good morning or good afternoon, depending on what part of the country you find yourself in today. Thanks for joining us. We've been looking forward to doing this for a long time. My name is Chris Prince. I'm the Chief Operating Officer of our company, Tip Excise. We're based in Frisco, Texas here. And we are a tax consulting business. But we focus on one thing and one thing only, and that is fuel tax recovery. We do offer a couple of other services that we'll talk a little bit about for our fuel tax recovery clients, but our main focus and our main specialty is fuel tax recovery. So you may be asking, what is fuel tax recovery? And that's why we're doing this webinar today. We get that question quite a bit. And so hopefully after our session here today, you'll know a lot more about it and understand it a little bit better. So that's the purpose of this webinar. And I've got a couple of members of our team here with us today. I've got my fellow panelists are Robert Wilden. He's our EVP of Business and Corporate Development. And I've also got Elizabeth Jeffers. She's our Director of Major Accounts, and she's also a CPA. And so they'll be joining us today and giving you a little bit of oversight about the opportunity around fuel tax recovery. First, I want to give you a little bit of the general structure of how we're going to go through this today. The first thing we're going to do is Robert's going to give us an overview of fuel taxes, or gas taxes as they're sometimes called, and some of the industries where recovery may be an option. And then I'll kick it over to Elizabeth. She'll get into the process for recovering these overpaid fuel taxes. And then Robert's going to walk us through a case study. And then we've got some frequently asked questions that we'll run through. And then we'll wrap up with our role in this and how we can help you. So with that, I will kick it over to my colleague, Robert, and he will give us a bit of an overview, kind of a one-on-one of what fuel taxes are. So Robert.
Okay. Yeah. Thanks, Chris. Appreciate that. So as Chris said, yeah, I'm EVP of Business and Corporate Development here at TIP, and I've been here for about 3 years, almost 3 years now. And so, yeah, as Chris highlighted, probably a great place to start today is just an overview and really kind of a 101 on fuel taxes, excise taxes, and exactly what they are. And then ultimately, why can you recover these taxes? So starting with that, fuel taxes are an excise tax that are levied on a per gallon basis at point of sale. Excise simply just means that the tax is embedded at point of sale, no matter kind of whatever the product is being sold. In this case, of course, it's fuel, whether it's gasoline or diesel. So there's two rates here that are levied. There's a federal tax of 24 cents a gallon, and then the states range anywhere from 15 cents a gallon to 75 cents a gallon. So, you're really incurring this tax at two different levels. So, for example, let's say you operate in Texas and you're consuming fuel there, you're paying 44 cents a gallon in fuel taxes. Now, so let's talk a little bit about kind of the recovery aspect of this. Since it is an excise tax embedded in at point of sale, you have to proactively recover these taxes. So if you are consuming gasoline or clear diesel in an off-road capacity, then you can recover these taxes. And I'll cover a little bit later kind of the difference between clear diesel and off-road diesel. But suffice to say that we do have clients that utilize off-road diesel, but they just don't use it exclusively. So there's still a recovery opportunity there for clients that are using off-road diesel. And that's really it. Like I said, I'll get in a little bit more detail, kind of the distinction between clear and off-road a little bit later. But that's really kind of the basics behind fuel taxes.
Okay, great. Thanks, Robert, for that overview. Can you kind of walk us through why there could be an opportunity to recover some of these taxes for companies?
Sure. So, I think around this topic, it's really helpful to think about kind of why this tax is levied in the first place. That, will really kind of help you understand why you can recover it to begin with. So fuel taxes are a public road use tax. So they're levied to fund the construction and maintenance of public roads. So that's the important thing to kind of remember, right? So if you are utilizing a public road, then the federal government, the state government, they want their share. So that's the important thing to remember. If you're consuming fuel in an off-road capacity, then you shouldn't have to pay, and you don't have to pay these taxes. And that's why there's a recovery opportunity.
Gotcha. Okay. Can you walk us through some of the industries that typically have the best opportunity to recover the overpaid fuel taxes?
So there's a ton of industries where there's good application. I'll highlight a few here, but there are a bunch. Food and beverage distribution is where we see a lot of application, and that's simply through the use of refrigerated trucks and trailers. The refrigeration units, whether it's on a box truck or on a trailer, the fuel consumption by that piece of equipment is considered an off-road use by the IRS in many of the states. And so that's where the recovery opportunity is in that industry. Energy industry, oil field services, there's a ton of, as you can imagine, a ton of off-road equipment in the oil field services industry, lots of yellow iron and specialized equipment that is eligible. Construction, pipeline construction, utility construction, infrastructure, kind of general construction. Again, that's an area where you see a lot of yellow iron and a lot of fuel consumption, off-road fuel consumption. Industrial services, we've got a lot of clients that service kind of the downstream energy world, kind of chemical plants, refineries, things of that nature. Services such as kind of sandblasting, hydroblasting, pressure washing, all that equipment that's using fuel in an off-road capacity. And then another big industry is lawn care, just general kind of landscaping and tree service companies. So I think the main takeaway, when you're thinking about application and industries, is it's really kind of any industry where you're engaging in a commercial activity and you're consuming fuel in an off-road manner, right? In an off-road piece of equipment. There's some exceptions, but that's kind of the general takeaway is it doesn't, you don't have to fit in one of these industries that I highlighted. It's simply just a commercial activity consuming fuel in an off-road manner. I would say that most of our clients tend to be food distributors, oil field companies, and utility contractors.
Okay, great. Thanks, Robert. That's a great overview of the opportunity and exactly what fuel taxes are. At this point, we're going to transition over to more of the how around the recovery process. But first, I wanted to reemphasize something Robert mentioned earlier. These taxes are levied at both the federal level and at the state level. And Robert and Elizabeth are going to go over the ways in which you can recover these taxes both federally and at the state level and get into the process that's involved as well. So, Robert, do you want to kick us off there?
Sure. So like Chris said, right, you can recover at both federal and state level. We talked about the rates kind of earlier. As far as the federal goes, you can file for either a cash refund directly with the federal excise tax department, or you can capture this as a credit in your federal income tax return. And at the state level, you can also file for a cash refund directly with the states, or you can capture this through IFTA reporting. Some people on this call might be familiar with kind of IFTA reports and filing IFTA reports. And like I said, you can capture this through your IFTA reporting. I guess I would, note that even though you do have the capability in some states to recover this at a state level in your IFTA reports, you still need to determine what are the refundable gallons, right? So you still need to go through the process of figuring out what are eligible gallons that I should be including and filing for in my IFTA reports. And so those are the two ways federally and at a state level that you go about capturing these taxes, recovering these taxes. Last thing before transition back to Chris here is I'd like to note that you can recover retroactively both at the federal level and at the state level. There's different considerations that you have to that you need to think about, and whether it makes sense for you. And if you kind of apply for the ability to go backwards, but technically you can go back both at a federal and a state level.
Okay, great. Thanks, Robert. Elizabeth, do you want to kind of jump in here, introduce yourself a little bit and start to walk us through the specifics of the process?
Sure, I'd love to. Hi, everyone. My name's Elizabeth Jeffers. I've been here at TIP for 3 years. I'm the Director of Major Accounts. I've been a CPA for over 20 years. And I'm going to walk you through a very high level of the process of how to go about recovering these taxes. So it's really a 4-step process. The first step is you got to get organized. So you've got to go in, you've got to pull your fuel records. Okay, so what do I mean by fuel records? Well, does your company use a retail card? Does it use a fuel distributor who does bulk distribution drops for you at your main location? Are you a reefer truck and you've got a fleet of box trucks and you get wet hosed every night? All of those fuel reports are relevant. So the first step is you've got to get organized. You've got to pull all the fuel reporting, and then you have to pull your equipment list. Okay, after you get organized, then what do? Then you have to compile your fuel records. So you need to put all your fuel records onto one master file. That will give you a really good sense of how much your fuel spend is and making sure you have all the relevant information that you're going to need in those reports. Okay, you've gotten organized, you've gotten compiled. Now you have to analyze. You've got to analyze the data. So by analysis of the data, what I'm referring to here is being able to tie the equipment to that fuel that is being consumed. So that's the most difficult stage of the process, because you've got to, it just takes time. You have to look at what equipment do I have that's eligible and what fuel am I consuming, and tie those two together. So you've organized, you've compiled, you've analyzed. Now you're ready to prepare the filing. First, you have to decide, what form am I going to use? Am I going to, as Robert had mentioned, file with the Federal Excise Tax Department for a cash refund? Well, that's one form with one deadline. Oh, no, I think I'd rather use it as a credit on my tax return. I've got a big tax liability this year. I sure could use that offset. Well, that's going to be a different form with a different deadline. As for state filings, every state has their own rules, their own regulations. They have their own eligibility requirements. So for states, you really have to look into what's eligible, what are their deadlines, how do I file? Some states require you to mail your filings. Some want you to fax them. Some want you to e-file them. So, and to note here, I think it's important to realize that for some states, the only eligibility, for example, in Alabama, is for agricultural equipment. So just to impress that there really is such a variance between the states. But that's kind of your process, Chris. You got to get organized, you got to compile it, analyze it, and then you got to file it.
Okay, great. Thanks for that, Elizabeth. That's it seems like there's a lot to it, but I think you kind of laid it out there in four steps for us. And so appreciate that. We're going to get into some FAQs here shortly. Some of the things we get asked as people start down this road, that will elaborate on some of what Elizabeth just outlined here as well. But next, Robert's going to jump into a case study of one of our clients. We thought it'd be helpful if we kind of looked at what we our experience with one of our many clients, and kind of shed some light on what this might possibly look like for someone attempting to recover some of these taxes. So Robert, if you want to jump in with that.
Sure. So I thought a good case study and client to highlight is really a recent client that approached us about assisting them with the recovery process because they'd made the decision to move away from off-road diesel. So real quick, I noted earlier kind of you can purchase off-road diesel, and I thought it'd be good to kind of make a distinction here between clear and off-road diesel. So clear diesel includes these taxes, right? Just like I talked about, 24 cents at the federal level, and then the states all have their own rates as well on top of that. You can purchase off-road diesel, also called dyed diesel, that excludes these taxes, but you can't really get it through retail channels. There's a little bit, but it's pretty rare to find it through retail channels. So you're getting it through a fuel distributor, and you can certainly go that route, but you've got to be careful. If you're using off-road diesel, you can only use it in off-road equipment. So if you're caught running off-road diesel in an on-road vehicle, then there's some pretty hefty fines. So you need to be careful about that. So this client approached us, said that they had run into some issues using off-road diesel, and they wanted to get away from off-road diesel. And could we assist them in the recovery process so they weren't leaving any money on the table? So we've engaged with them, and I thought it'd be good to kind of go through several of kind of the reasons why they wanted to get off-road diesel. One is, like I just said, was they really didn't want the potential liability of running off-road diesel anymore, and running that potential of somebody putting it in a pickup truck and getting caught on road. The second was they were being offered a discount by their fuel card provider to use clear diesel. And we see this from time to time. It's a competitive market out there, and you've got fuel card providers that sometimes will provide incentives, to fuel consumers to use clear diesel. So that was something that they were looking at. And then third was, they did their own internal analysis and really determined that they were really not saving that much money using off-road diesel versus clear. Once you factored in kind of several things, couple things that were, factored heavily into that were, the cost that you incur to get dyed fuel through a fuel distributor, right? There's a cost to that service, and it's not free. So, you're signing up with a fuel distributor, and they're charging to bring that dyed fuel out to you, or fill up a tank or whatever it may be. And the second is, if you are using off-road diesel, while you are getting around the taxes at a state level, a lot of the states will assess a sales tax, right? So they're going to get their money in some shape or form, whether it's through levying an excess tax, right, or through a sales tax. So you kind of mix all that up together, and this client decided that they really wanted to move off of dyed diesel. So that worked for them. It's been great. We've just gotten engaged, and we'll be able to get them money back, and so they're not leaving any money on the table. I would say that most of our clients just simply use clear diesel, and we file for them to recover these taxes so that so they're not leaving any money on the table.
Okay, great. Thanks for that, Robert. And I'll just add, this is just one example of how our clients across different industries have taken advantage of the opportunity to recover overpaid fuel taxes and decided to go down this path instead of the dyed fuel path. Robert or someone else on our staff would be happy to walk you through other examples that match up with your specific industry and situation. Outside of today's webinar, we'll provide you some information at the end to get in touch with us, and we're always happy to walk through your specific situation and kind of compare that to some of the other clients that we've helped in the past. So next, we want to jump into some of those frequently asked questions that I mentioned earlier. So I'm going to turn it over to Elizabeth to walk us through some of those questions we get from clients when they begin to explore this opportunity. So Elizabeth, back over to you.
All right. Thank you, Chris. So really, I get three questions. It's three questions. And these would be the questions that I would be asking if I were the taxpayer. So the first question is, I don't know if I have perfect records. Can I do this if my records are not perfect? Absolutely. Yes. There is a standard of reasonableness in the code, and implicit in that is you're not going to necessarily have perfect records. We see a variety of different reporting, and we can absolutely work with what you've got and see how we can dig into that. The second thing that people ask me all the time, how much time is this going to take me? Well, you know what? We really can't gauge how much time it's going to take you. It should not take long. But before we start any engagement, we can always ask for a sample of data and look through that and see what you have and maybe what might be missing and how we can work with what you have and gauge how much time it's really going to take. So, you know, to answer the question, how much time is it going to take? It really depends on your reporting style, but in general, it does not take much time. And if that is a concern, we can just do a sampling of data, work with, what we get from that sample and gauge, the time involved in the project. The last question I get, and this is particularly relevant nowadays, I don't know if I have enough staff to prioritize this project. I'm running super lean. My accounting department got decimated by COVID. I really don't have a point person with any free time to work on this project. Well, you know what? You don't have to, because once you provide us the data, those 4 steps I outlined, steps 2, 3, and 4 are on us. So we take it, from once you give us the data, we do all the work and then deliver the filing to you to review and have a call to walk through that filing and how we arrived at that. And, it really should not require any staffing by the taxpayer. So that's usually what I get.
And Elizabeth, I'm going to jump in here real quick. So, I think it's good to highlight here on the records. Just like Elizabeth said, the records, they don't have to be perfect. Now, you have to have some records, of course, but they don't have to be perfect. But as Elizabeth noted, we're happy to take a look at what you have before we get engaged. And if it looks like that the records are, they're not going to suffice, then we're happy to, provide consultation on what you need to do and what records you need to, have in place, how you can make improvements to get to a point where you've got records that that are defendable, right? And in a lot of cases, it's just little tweaks here and there. It's not, some massive undertaking and putting in some, big new ERP system or something like that. So I think that's kind of important to note, is that we're happy to take a look at what you're doing today. If it's not working, then we'll give you some advice on what will work and put you in the best position going forward to recover these taxes.
Yeah, that's a great point, Robert. Also, I'll throw in there, from time to time, we work directly with clients' fuel suppliers, of course, with their permission. So we're used to doing that. So sometimes we can come in and help get these records directly from your fuel supplier as well. So it's one of the things we offer for our clients. So great. Thanks, Elizabeth and Robert, for walking us through that. At this point, we're going to transition over to Robert to talk a little bit about what we do and how we work directly with clients. So Robert, if you'll explain to our attendees a little bit about how our engagement works and how we help clients.
Yeah, sure. So it's really pretty simple. Our engagement is really pretty simple. We only get compensated once our clients obtain a refund. So there's really no financial risk to the client in engaging in this process. There's an investment in time, but there is no financial risk on the front end. And, when you're filing for cash refunds, which, by the way, most of our clients elect to file for cash refunds, but when you're filing for cash refunds, as a first-time filer, you will potentially go through a review process. And we handle that entire process and all the interaction back and forth with, the revenue agent that is assigned to the file. So it's really good to have, a good qualified professional represent you in that review process that knows, what methods are accepted, not accepted, even professionals that have a good rapport with some of the revenue agents. So, and then once you get approved, then subsequent filings tend to get processed kind of without further review and pretty quickly. But it's really that first time filing where there's potentially a review, you need to get approved, you get that stamp of approval, and then subsequent filings go pretty quick. We often work with our clients' tax preparers if we need to. Happy to do that. We have, like we talked about earlier, we have some clients that would rather include this as a credit in their income tax return, and so we'll work with their existing tax preparers to make sure that's that's smoothly done. And probably the last thing to highlight here would be, like Elizabeth noted, it's really a turnkey service. I mean, once we collect the data from the client, then we really handle the rest. And so it's designed that way to minimize the burden on the client and the time investment. And that's kind of it. It's a pretty simple process.
Okay, great. Thanks, Robert. One thing, we're getting pretty close to the end here, getting up against our time limit, but I did want to ask one thing. One question's come in here. Maybe Robert, you could tackle this. How is this different from IFTA filings? I know you mentioned IFTA filings and that was a pathway in some states to be able to recover this fuel tax, but can you talk a little bit specifically about how this is different than IFTA?
Okay, so very similar. So the IFTA filing process simply takes the state fuel taxes that you're incurring and allocates them amongst the different states that you're traveling in, right? So it's just an allocation of all the fuel taxes that you're paying amongst the states where you're using their roads, right? So it's simply just a pro rata allocation. Now, IFTA allows you to file kind of in your one-based jurisdiction and then do that allocation. Like we talked about earlier, you can recapture these state tax refunds in your IFTA, but again, you need to make sure that you're determining the gallons that you're filing for correctly, right? But that's really kind of the big difference, right? Our process is recovering the taxes that you shouldn't have paid, and IFTA filings is taking those taxes and just allocating amongst the states based on the mileage traveled in those states. So that's kind of the biggest distinction there, Chris.
Okay, great. Yeah, we get a lot of times, someone will start talking to someone about what we do, and they'll say, "Hey, I already do that. That's IFTA. You're talking about IFTA, right?" So I thought it was important for Robert to point out that this is different. It is worth mentioning that with some of our clients, we do handle their IFTA. If you're a fuel tax recovery client for us, we will help you with your IFTA filings. So that is an ancillary service that we provide for our fuel tax recovery clients. So we can help with that as well. So I think we're getting close to the end here. So I'll go ahead and wrap us up. A couple of things I wanted to point out as we come to a close here. This is a great way to reduce your tax burden and increase your bottom line. It's also a great way to reduce your overall fuel expense and lower your average per gallon cost, which a lot of companies are interested in these days. Also worth pointing out, this fuel tax, that fuel tax generally is an operating expense in your financials. And so this refund is an add back in your financials, directly boosting your bottom line. And also, Robert went through this in our case study. If you're looking to switch to clear from off-road and reduce some of the risk with dyed diesel, then this is a way to do that and not leave that money on the table. So with that, I want to thank our panelists, Elizabeth and Robert, and thank you all for taking the time today to learn about this opportunity. For those of you with us here live today, you'll be receiving an email with a recording of today's webinar and a link to schedule some time to talk about your specific opportunity. You'll also be receiving a very quick 5-question survey, take you less than 2 minutes, if that. We'd very much appreciate it if you took the time to complete it for us. If you're catching a recorded version of this, you can get in touch with us at tipexcise.com. You can find all our contact information there, phone number. You can directly message us through the website. Again, it's tipexcise.com. This is a great opportunity for many businesses, and there's no obligation or risk in talking through your situation with us. We've been doing this for a long time. It's our specialty, and we've helped a lot of companies recover a lot of money. So if this is something that you think is an opportunity for you, don't go it alone. We're here to help, and we look forward to helping you. So thanks for joining us on this webinar today. Hope you learned a little something about gas tax refunds. We hope that we provided you with some valuable and some actionable information to help you on your journey to recovering some of those gas taxes that you may be owed. Thanks a lot for joining us, and we'll see you next time. Thanks.